All right, let's do this. Let's answer some of your questions now. John, you are up first. Well, this says Deere we're doing, so I guess
that's right,
you're doing
John Deere.
Okay. I had a sheet that said Domino's Pizza, but
okay,
maybe that's.
I like them both. Domino's was yesterday, and I like that one. I'm not going to argue with Josh between Shake Shack and Domino's, although I like Domino's an awful lot. But as far as this
diversify.
as far as this one, Scott, John Deere tractors, new all-time high.
You could be like Farmer Jim. You could eat Domino's.
Don't eat Domino's. You live in Chicago. Don't let me catch you eating Domino's.
No, I don't. But I think they have a nice profit margin, and so does John Deere. And they say farmers are more likely to be spending right now, Scott. That's one of the big drivers today, and that the deal with China, when China finally comes back online, that's why the stock's up as much as it is.
Okay,
today.
That was from Kevin in Webster, New York.
Kevin.
My apologies. I had an old sheet on top of that. Megan, you're up now. From Dave in Atlantic City, New Jersey, thoughts on opportunities in the defense stocks?
Yeah, so at the sector level, we are overweight industrials, and we like aerospace and defense within that. I think that there's a lot of speculation around defense spending. I don't know that it's going up meaningfully in the near term, but it's probably not going down either, particularly as you're looking into new ventures like space. It's been weighed down a little bit by some names like Boeing, and we think that, especially with the coronavirus concerns, growth concerns within industrials, aerospace, and defense is a good place to be amidst what's likely to be some higher volatility.
All right, Josh, to you from Bonnie in Reno, Nevada. What do you think about Dropbox, DBX?
So this is weird. It looked like a short squeeze to me at first, but then I looked, and the reported short interest is only 3.9%.
Best day ever right now.
Yeah, and I knew there was like a high-profile short call made yesterday or something. I don't have a position in the stock, but this is what happens. 19% year-over-year revenue growth for the quarter and for the fiscal year, which I think these were numbers that were not expected. Free cash flow is like $160-something million. It's a way better than expected quarter, and they authorized a $600 million buyback of Class A shares. So if you're caught short a name like this, and I understand the reasons not to like it, it's a commodified business, et cetera, but they're delivering. And the quit rate, like people continue to pay. So it's not quite as commoditized as you think if the customers aren't leaving for a cheaper version. So that's what's going on here. I don't own it. I don't plan to buy it, but it's a better name than people thought it was.
Scott, Alt Data said exactly what Josh described, that people are still going for this name in a big way, as well as some unusual speculation.
What's going on in the options, though? If I'm not seeing shares short, what do you think might have triggered an explosion like this?
The 19 and 20 calls, Josh, as well as July 21 calls.
But were they buying
puts? Which is way out there. No.
Okay.
So this was all upside speculation.
So this is just people that want to be in?
Yes, sir.
Okay.
Yep.
Okay. Kate, more to you.
Yep.
From Jeff Cotton in Scotland.
Excellent.
Thank you for the question. It's a long one. I want to go through it because it's a good one, too. Hi, my current portfolio, heavy in Dow, S&P, and European actively managed blue chips, plus a large position in cash, as I assume the markets would be punished with the present coronavirus. My question is, will my current portfolio be okay in a U.S. recession? I am buying back into the U.S. market on dips. Thanks for the info on CNBC. I love you guys. Thank you so much for the question.
Well, Jeff, you got a lot of concentration in risk assets. So in the event of a recession, the chances that you are going to be perfectly insulated, I think, are very low. That said, in the event of a recession, please call. Do not sell. You're not going to be able to time the bottom. And in fact, we think the probability of a recession at this point in the cycle is actually relatively low. Earlier in the show, you heard us talking about central banks, the monetary policy put, and the floor that's been put on under risk assets. I think in addition to that, the indices that you own, and you mentioned blue chips in Europe in particular, we're talking about higher quality companies that are probably better insulated from both a balance sheet and a cash flow perspective than they have been in any other time, and certainly during the last recession. So I can't promise you no declines, but you look like you're up in quality, and I think you'll be well positioned.
Okay. Did you say please call?
Please call the show.
Oh, okay. I thought you'd call BlackRock or something like that.
You can call BlackRock. We have some great funds.
You guys have enough assets under management, okay?
We do a good job, Scott.
Just so people can get in touch with you, what's your email address?
Or your phone number.
Personal.
Steve Weiss, Mel in Canada, which is the best of the big four airlines? Love, Delta, United, or American?
Well, here's the good news. Aside from American, which has been a perennial underperformer, you don't really have to choose because they pretty much trade in lockstep, some variation. I own United. I bought it when it was at big discount to the others. These stocks are right at the heart of what's going on with the coronavirus. Traveling is way down. It's going to be down for a while. When it does come back on, you're also going to have, hopefully, the 737 MAX come on. So you have plenty of capacity coming on. So right now, I'm not selling anymore. I shaved a little about a week ago, but it's so cheap. I'm staying here even when they cut earnings.